Yo, what's up, you guys? And we are back with another breakdown where we are going to take a look at the dollar index, US oil, NASDAQ 100, as well as the Dow Jones and gold from both a technical and a fundamental perspective. And if you are new here, a sub would be appreciated as I provide valuable educational content on a daily basis. If you do enjoy the content, please do consider smashing that thumbs up button there as well. But as always, let's go through some of the questions that we received. Refillware is saying, I'm waiting for your personal strategy. I wonder how is it because one you are using is very accurate. God bless you. You are my lifesaver. Thank you so much. As soon as I hit 10k subs, guys, I'm gonna drop the sources for you guys. Kenneth is saying, hello, can you please analyze the German 30 index? No problem. I will add that to the watch list there. Also, there was the last breakdown I did. This was actually very clean. But let me add that for you, my good friend. Next one, just the suggestions. Why can't you screenshot some of the analysis and post them in the Telegram channel? The reason for that is because I want people to come and watch the entire full video. They're more than happy to screenshot it, but it's no point for me to send out screenshots. I'm here to educate people to understand how I got to that analysis. So it's better to come and watch the video to see how we were able to get there. So if you do get into the trade, you can at least explain to someone else, I'm getting in this trade because of X, Y, and Z. Lord Fibonacci, good market breakdown. Rolio, please analyze NZD-JPY next time you do a breakdown. No problem. We can definitely add NZD-JPY to the watch list here as well. Let's do that. Next question is from Aiden. What broker are you using? And love your videos, very informative. Thank you. No problem. So I don't trade with any brokers. I do trade with prop firms, with my forex funds, Next Step Funded, and then with another prop firm which I'm not gonna mention here because it's not worth my time. Which is the most liquid volatile USD pairs to trade? I would probably say, the major pairs, which is GBP USD, Euro USD, AUD USD, NZD USD, the big boys. Paul KG, hi, can you hope you had a good weekend. Can you please take a look at the SNP500? No problem. We can add that to the watch list. Also, there you go. Let's clear that. Remove drawings, and then Mr. Jack, that was it. Okay, cool. Now, before we get started, we're obviously going to go through some of the fundamental data that played through last week. If you need to know what news events is coming through this week, we basically know that so far, where we stand now, we've got some flash PMI unemployment claims. We've got the University of Michigan consumer sentiment, and Powell's coming out again to speak once again. But what I do want to focus on is obviously news events that came through last week, and we're going to go through them. The first one is from the Fed officials. We obviously had Jerome Powell that came through last week. If you remember, you'd have noticed here the FOMC meeting minutes, so we're going to take a look at that. It says here, Fed officials see upside risk to inflation possibly leading to more rate hikes. Now, whenever the Federal Reserve talks about hiking interest rates, that is always a bullish outlook for the index, because higher interest rates tend to invite or attract investors to invest in a currency with higher interest rate. You're more than happy to go through the entire article, but I'm just taking you guys through the headings of that. So that was a positive sign for the index, that the Fed is likely to continue with hiking the interest rate, is obviously to bring down inflation, which is the CPI data. Also, next up, we've got the stock market. Says here the NASDAQ was down 4 days in a row, not as long as a weekly losing streak since December. That's obviously when the Feds talk about hiking interest rates. Unfortunately, due to the negative correlation between the stock market and the index, you tend to see that happening vice versa. So when the dollar index increases in value, what you'll notice is that prices like the NASDAQ, the Dow Jones, the precious metals, which is gold, as well as silver and platinum, tend to decrease in value, including the S&P 500. also, which is why you see the S&P 500 is down, the NASDAQ's down, the Dow Jones is down as well, but the dollar index is continuing that move to the upside. Oil was up 1% on signs of a slow US output. So oil has been doing very well overall. If you look at the price action on the oil, you can see oil's been very bullish. Just found new support potential head and shoulders pattern, which we're going to speak about. And last but not least, gold bound for a weekly dip on bets that that the Feds are going to keep hiking the interest rates. Like I said, higher interest rates, whenever the Fed speaks about hiking interest rates, that normally leads to a stronger bullish dollar, a stronger dollar index, and that is one of the reasons why on yesterday's breakdown I expect the index to continue higher. But the index is obviously, well overbought. I do expect a correction, potential correction, but as it stands now, correction would be too obvious. So we're going to leave that analysis. If you want to get the deep down of that, I did a video yesterday. Just go check that out there as well. We're going to start with the US oil over here. Now, if you go on the weekly time frame, what do we have here? Firstly, we can see the market had reached a very strong level of resistance. This level over here acted as a level of support. The market broke below that. We had a double, triple top, 4 triple tops over there. The market had printed what's known as a W formation. After a W formation, you normally expect a pullback to the neckline, so a deeper correction is still expected before we can expect this market to continue any higher. On the weekly, the market also printed a massive impulse. So after an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high of this massive impulse, and we do have a 61.8 Fibonacci that's lining up perfectly with a W formation, also a potential previous resistance that got broken that is now acting as a level of support. So this could be the long-term outlook for the price of oil. It's not that any of us is going to benefit from it. Next up, we're here on the daily time frame. We have this very important structure that the market is approaching. This level over here acted as a level of resistance, support. Market broke above that, came back, tested at support. The market found an equal low. The market's back to go and test that level as resistance. The market also is about to print a potential head and shoulders pattern. Now, a head and shoulders pattern is considered a bearish pattern from a technical perspective. Now, the best way to approach this is obviously to wait for the market to start trading into this area over here, and then from there we can definitely start looking for that selling opportunities for the market to go and continue this move to the downside, and for the market to go and hit that neckline of the W formation as we identified from a weekly perspective. Next up, we've got the NASDAQ 100. Now, if you remember, this was the last breakdown I did on it, and the market went exactly as anticipated, and hopefully if anyone got hold of that, should be making some good bank over there. Now, the first thing that we can see is that the NASDAQ had broken below a very strong structure. The NASDAQ had also print what's known as an overextended M formation. Now, this is an overextended M formation. After an overextended M formation, you expect a pullback to the left legs, and this is exactly what we can expect going into the new week, slight pullback, and then that continuation to the downside. Now, the continuation is expected for the market to hit this previous level of resistance that is now acting as a level of support. Now, because we are retail traders, we obviously only trade short-term momentum, so the best way to approach this is to obviously wait for the market to pull back. Now, the one thing that we do keep in mind over here is the market obviously broke below this level over here, and this was a very strong, this was a very strong liquidity pull from this equal low. Market dipped lower, grab that liquidity. We do expect a pullback before a continuation to the downside. So I would say we could expect the NASDAQ to pull back into this area going into the new week, and then from there it's going to be a long way down for the NASDAQ. Next up, we've got the Dow Jones over here. Now, the Dow Jones obviously reached this previous structural level. It not only reached the level, but potentially attempt to break below that. Here on the weekly time frame, what do we have? Now, from a weekly perspective, it's clear the market had actually came back to test this previous level of strong resistance, and it came back and hit it as support. Now, this is how simple a price action basically plays out. You can see resistance got broken, market came back. We can expect the market now to continue higher. Remember, the Dow Jones is at the industrial companies. It's not like the NASDAQ with the tech companies. I do expect the Dow Jones from the level where it is now to continue higher, but it's important to keep in mind that on a daily time frame we are trading in bearish territory. Now, the best way to approach this is obviously we can see the market is currently testing previous level of resistance as support. I would suggest that you wait for the price action to start developing bullish, and then obviously start looking for that buying opportunities. The first point of reference would obviously be for the market to get past this level, because that's the previous level of support that got broken, that is now turned resistance. And then from there, you can definitely start looking for that long-term buying opportunities, obviously from a reliable platform that you know it's going to pay you out. Next up, we've got the S&P 500. You can see the S&P 500 price action has also been very bearish, and you can see here market printed an equal low. If you go down on the weekly time frame, what do we have now? From a weekly perspective, we can see that this market printed an equal high. Firstly, if you look slightly left here in this corner that we have over there, market printed support, broke below that, came back, tested it as resistance, not once, not twice, we came back for the third time. What we have is we've got a potential of a deeper retracement over here, because there the market broke above the strong level of resistance. We do expect the market to come back and test it as a previous level of support. We are trading in bearish territory. We are trading in bearish territory, or undivided territory, because we got a market that broke below support and the market that had just hit support, and it's basically stuck between support and resistance, right? Most of you should know that. Now, the best way to obviously approach this is we do expect a deeper correction. Now the correction is expected to at least the 0.382 of the Fibonacci taken from the high to the low. Then you can see that the 0.382, if you look left, is lining up perfectly with that previous level of resistance that is now acting as a level of support. There we go. I'm just joking. Support got broken, so it's now acting as a level of resistance. From there, we can also make another update and see how the price action develops. Alternatively, we could potentially just get a deeper pullback, but that we're going to speak about once we get to that level. As traders, we have to be reactive, not predictive, and learn to adapt to the ever-changing market environment. Gold, same thing over here. Gold is due for a excuse me, it's due for a short-term pullback, and then a further continuation to the downside for the market to come and hit this level. It could potentially just be a massive liquidity spike up and then continue that move to the downside there. Also, next up, we've got the German 30 printed an equal low. Market was stuck into this consolidation phase for quite some time. As you can see, price action played out perfectly. We had a consolidation, support got broken, tested it as resistance, new support got formed, market broke below that. We obviously expect a pullback before a continuation to the downside. Now, you can see here the market also tested previous support, so we do expect this move up. Once the market gets there and you request a new update, I can obviously tell you more or less where I think the market's going to go next. Next up, we've got NZD JPY. This market is currently trading at support. Now, this support is not like any other support, because here we've got a liquidity move to the downside. Now, if you go onto a lower time frame, you'll see that is actually more room to the downside. So this is more likely the way the market's going to go. So I would just do this on the 4-hour for you, so because the price action makes more sense, and I do expect the market to continue lower to hit that level. There's no reason for why I do not see this move take place. Over here, there we go, and you can also see the market had finally broken out of that consolidation. Guys, that is it from my side. Also, what I would suggest here is you use a round number, so I would probably go for 85k like that, and that's basically where I would set my take profit if I had to enter this market. Guys, that is it from my side. Enjoy the rest of your Sunday. If you did enjoy the video, please smash that thumbs up button, and also do not forget, if you do need information on educational content, head over to the playlist that I have created and go look at the educational content. That is it from my side, guys. Thank you for your time, and as always, cheers for years.